Hello, everyone. We're going to get started in just a minute. I just want to make sure everybody has a proper time to connect to the presentation today. I see people are still loading in, so another minute or two. We have a great presentation for you today. Chat and Q&A should be open. Everybody, if you want to let us know you're there, tell us how your morning's going. If you're excited for the presentation, please feel free to use the chat. But again, I appreciate your patience. Just another minute or so we can let people funnel in. All right, just a few more moments. All right, that should be enough time, and we'll get started. Hello, everyone. My name is William Mucker. I'm a client executive with Camoplan and would like to thank you all for joining us for today's webinar, How to Profit from Modular Construction Trends with Aram Sarkisian and Jeffrey Block with Lacreme Partners. As a quick note, please be aware that we will be answering questions at the end of the presentation. However, feel free to use the chat and/or Q&A function on your screen to pose your questions. Whenever they cross your mind, they will be saved and addressed once the presentation portion ends and the Q&A portion begins. Before we get started, we do have a brief disclosure we have to go through. Everything presented in today's skipped a slide right there. Excuse me. Everything presented in today's webinar is strictly for educational purposes. Camoplan is a neutral third-party administrator of IRAs. We are not attorneys, CPAs, or financial advisors. If it comes to a time where you need advice in any one of those fields, we highly recommend you consult with your team of professionals. We are more than happy to be a part of that dialogue with your team of professionals to make sure the investment process is quick and seamless. We do not sell any investments at Camoplan, nor do we endorse any products. We will never call you about the next best investment opportunity. We believe that you should always do your own due diligence before investing your money, whether it be your retirement funds or otherwise. Once you have found the investment that is right for you, we will help you open that account, fund that account, and facilitate the transaction into that investment. Here is my contact information. If you or anyone that you know who you believe can benefit from the information have any questions about what is discussed in the presentation today and how it applies to self-direction, please do not hesitate to contact me. I'll be more than happy to help. And without further ado, I'll pass the controls over to you guys.
All right, great. Thank you. We'll really appreciate that. Let me go ahead and first share my screen. And now pull up this presentation and okay, I should be hopefully in a mode that looks appropriate. Can you guys see it well?
Yep, looks good to me.
Okay, perfect. So let's start running through it. Thanks everybody for joining us today. Here's the overview of what we're going to present. We should come in well under time to leave plenty of time for questions, but we'll give you a quick intro about Lacreme Partners, Jeff and I, and our company. We'll get into really, it starts with macro housing considerations. We're here to talk about modular construction, but really the backdrop of that is what's happening in housing. So I think it's important for that context to be set up. Then we'll talk a little bit about prefab modular construction, really as a methodology and as an asset class, we could call it maybe. Well, really, it's the methodology more than an asset class. We'll show you a short video, kind of a cool video of one of the projects showing how it comes together. We'll talk then about our market experience in Austin, so you have some real world understanding of the things we're doing and how we're profiting from it, and how you can profit from the trend. Really is all of it. So we'll get to some of the numbers at the end, so you can see the profit margins of some of the projects and why we find this to be such a compelling way to go in terms of residential construction. All right. I have another set of disclaimers. I'm not going to read all of these, but essentially, this isn't an offering. If there's an offering, that's really separate and apart from this. This is more educational. Use your brains to make your decisions along with your professionals. You guys know the drill. I won't read through it all. So a little bit about Lacreme Partners. So basically, Jeff and I are both, there's two sides of us, right? We have spent a lot of time in technology and in business, and many of you that earned your hard-earned dollars that are pouring into retirement plans did the same thing. So we've led businesses, we've run businesses, we've managed large teams, profitable P&Ls, and a lot of that gave us two things. One, dollars to invest, and secondly, a lot of business experience. In terms of our investing, We are both limited partners, essentially passive investors, like many of you are looking to make those investments. And we've done that for a lot of years. And it was through that experience that Jeff and I both were childhood friends, frankly. So we've been at this both professionally and as friends for a long time. But we both said, look, there's probably a better way to bring these type of investments to our friends and family. And it was really that push that led us to put together a vehicle to do that. And the Crumb Partners is that vehicle. So for about the last 6 years or so, we've been putting opportunities together in various asset classes. We're somewhat asset agnostic. We look for trends, diversification, and a diversified angle, right, in terms of how we can make outsized returns in the market. So we're investor centric. You can get a sense from this, all the different things we get into. Um, and I won't go into that. You'll have, folks will get a copy of this deck afterwards if they want it. I think you will, but if anybody wants a copy of the deck afterwards, we're happy to share it. So you
Reach
can
out to us and we're
you
happy to
can
share it
you
anyway.
can
So
reach yeah, you can reach out to us. We'll share any deck we've ever made. Anyway, as far as Jeff and I both go, again, a lot of words here. I'm not going to read this, but you guys will have this deck later to read through. Tells you a little bit about us. The one thing I'll say as it relates to development and modular construction is we have done development projects. A couple of big ground up projects in the last couple of years in Houston. So we built a couple of build to rent communities, 129 units and 146 units respectively, from ground up. So we very much understand what's involved in both the process of building and also the economics of it. And so that gives us a really kind of good insight into why we found this modular construction technique so compelling. Okay, so starting off as a backdrop, right? It really, where is housing today? Because, you can say that modular is a great way to build, but it's really a supply and demand problem. Do you need houses? Well, we think you do. And if anybody's watching the news and seeing what's happening, there's a massive shortage of homes in the US. And this graph kind of shows you where some of those shortages are, the dark green being the highest shortages. But really, anecdotally, so what happened, right? A big part of this goes back to the great financial crisis. And you guys may or may not remember what was going on was there was really kind of a bit of overbuilding just ahead of that. So in the oh 05, oh 06 kind of lead up to that, there was a lot of building even into oh 07. And there was a lot of not only cheap money, but really bad financing decisions and bad credit decisions made. And so there was this overbuilding that happened, not huge overbuilding, but slightly overbuilding in the residential housing market. When that crashed and the bottom fell out of it, builders got really spooked. And really, if you look back to the curve, and I'll show you this a little later, there was a massive underbuilding for a very long period of time. And we've never really caught up with that. So the demand has really outweighed the supply for a long time. Couple that with things like people being stuck in their homes because they've refied back in 20 or 21 when rates were low. They've got an incredibly low mortgage, and giving that up becomes tough to do. So people are hanging on to their homes more. So all of these factors blended make for a pretty tight housing market, which is why even with interest rates going up, you didn't see any price erosion, very little, if any. In some cases, you saw prices rise, and we believe they'll continue to rise in the longer term. This graph is an interesting snapshot of exactly what I was saying with the housing market. So you can see nominally kind of where the mean is, let's say, in that green line. You see in that run up kind of early 2000s and maybe 2005 being kind of the apex, there was a lot of building happening, maybe more than usual. And then, of course, the financial crisis hit, slammed it down, and you can see we've almost not recovered at all. There was a short blip in 21 where it kind of came back, but even that is sort of almost back to the average, let's say, over the past 40 plus years. And now you even see it dipping again. So, we're really underbuilding, and this big gap actually creates a glut. So not only do you have to build to keep up, but you got to build to maintain what was, not built in prior years. So we're behind the curve, plain and simple. Housing market from a price perspective, you see the headline here. There are people believe there's macro headwinds kind of in the economy. We saw this huge run up in interest rates, but still, family single family house prices are up, and we own rental units also, and we see rents have gone up. They've slowed down a little bit, but they're doing quite well. So it's interesting. So again, these things people aren't selling who have locked in rates. Look, I'm personally a victim of that. I've refied my primary residence every time it would go down. I'd refi again, and I'm sitting on a mortgage rate in the twos, and it's impossible to sell. Right? It doesn't make any sense. So I wouldn't sell my home even if I moved at this point. Low supply of homes, and the builders can't build enough. Another point I didn't make is building has gotten expensive as well due to inflationary forces and labor shortages and other things that are just causing part of it is builders being a little bit spooked, and part of it is the math doesn't exactly add up for many new building situations, or the margins are slim. So all these things are causing single family housing prices to remain strong. Mentioned mortgage rates. There's a belief, and I think even lately, what you're seeing in some of the economic cracks and some of the telegraphing from the Fed, it's likely we hit the high water mark on interest rates. It's probably coming down, and this is a forecast of what that curve might be. But again, we've seen rates high, and it hasn't budged the market much, and now we're seeing maybe a more relaxed thing that might make uh, buying even spur maybe more people entering in the market. For every time it goes down a half, 50%, 50 basis points or something. So this might be another force that we see as winds at our back. Probably not a headwind. We saw probably the greatest headwind we'll see, at least for the next couple of years, as far as mortgage rates go. Okay, so how does this get into prefab modular housing? Um, so when we think about why modular for the single family house development, there's a couple of major things. One is just operational and cost. Well, it's really operational and cost. So the one is it's lower cost. And so we'll show you it's about 50% lower cost than traditional construction, which is huge. The other is just the faster time to scale. So we'll show you later kind of a Gantt chart look at side-by-side comparison of traditional versus modular. And you can see where you really are able to shave massive amounts of time. Cash conversion. So imagine we did the development project I mentioned that was 140 odd units. We're still in that wrapping up some of the phases. It was a 2 year run, right, to do the building portion of it. So that's a long time. We're talking about with these modular residential construction from, we can be 6 months, 5, 6 months from dirt to finished, to selling a home. So that's really fast. So it's a quick conversion of that cash, and that hold time on that cash. So in other words, if you're deploying money and you have a loan for a construction loan or otherwise, you know, that money costs money, right? Either in interest or in the opportunity cost of not doing something else with it. So that cash conversion cycle is great. Another thing that's not really shown here is like visibility. So because you're only looking at a 6 month out, you're not predicting when we got into the 3 year projects, right? For us, we have to think about what does 3 years look like down the road. Now we only have to believe that, okay, well, we'll have this house ready for sale in 6 months. 6 month horizon view is a little easier to predict, so it's helpful. And then when we say higher quality, I think the other thing to think about with higher quality is consistent quality. So you can imagine if you're building a stick build home, you've got to get a framing crew on the ground. Well, framing crews can differ. Framing crews can show up late. Framing crews can, lots of things, variables can be introduced. In this case, we've got factory built modulars that are being built, to some very specific, very production line kind of specification. So they're quite good at the quality control. Wouldn't leave the factory and arrive at the site to be installed unless it was, met all of the specifications. So you have consistency and quality. Talks a little bit about factory built, completed units, the dedicated crews. So we do have some dedicated crews we'll talk about a little bit later. And then ESG. So from a sustainability and waste perspective, it's an easier way to go. I don't know if you've ever been to a construction site. It's pretty environmentally impactful. It takes a long time. There's waste, there's wood, there's things that get thrown away. In the factory, they do a lot to make that to minimize those things because it's really much more of a robust manufacturing environment. All right. Um, Cost advantage, so reduced labor cost. I would also say predictable labor cost is a big part of this. Improved material efficiency. I mentioned that. And again, you'll have the decks. You can read a lot of these words later, but there's minimized weather impact. And what that means is, when you're building in a lot of different locales, hey, the winter's tough, right? Everything shuts down in some cities. We've got, essentially we're delivering a finished module, and so these modules then get linked together to form the house, and you just do all the kind of finishing work and all of that. But these come kind of ready to go. They're sealed, so to speak. So you don't have things like, well, we did the framing and now it's wet. We have to let it dry out, and then the crew's got to wait for this to dry out or that to dry out, or can't get there. All of those things can factor. I can't tell you how many weather days we had while we're going through, more conventional development or traditional development. Such a huge thing. And then the other is just design flexibility plus standardization. So you have the standardization of, you can imagine these modules are like Lego blocks, right? They get put together to to manufacture kind of the home you want. But at the same time, it's not completely cookie cutter, depending on the square footage, depending on the layout of the land and kind of how you want to configure your homes. You can take those same Legos and move them different ways, one story, two story, however you like it, to make it fit the intended use. So there's but with not without with sort of still maintaining the high quality and the quick scalability. So it's a really interesting way to go, and I think we're going to see a lot more of this in the U.S. This is an interesting chart that shows you the time to completion. So on the top here, you're looking at traditional construction in the black, and then the prefab modular in the blue. And what this shows, so let's look. So at the traditional, you buy some land, you purchase the property, and then you've got this planning and design phase, which is kind of long, right? You got to think about what do you have? You have to plan, you have to design, you got to go get permits, you got to do a lot of this stuff, work with the city on that. Kind of tough, right? Then you move to once all that's done, you break ground, you can start working on the foundation. That takes some time. It's got to dry up, all that good stuff. Then you get into on-site construction, which takes a while. You get 8 months there. Then you're kind of finishing up whatever you're doing here. So boom, in the overrun section. So all this is linear. The other thing you'll see is nothing can be done in parallel. Let me take you to the prefab one. And the prefab one, there's no planning and design. Well, why is that? Particularly where we're doing work in Texas, the modular construction design is actually stamped at the state level, which means that it's already got a pre-approval to be put in anywhere in Texas. It meets with state code, it meets with all that. So essentially, we're ready to go. We just have to do some more simple permitting with the city to make sure that there's the easebacks and I'm sorry, setbacks and other things are being adhered to. But they're very much encouraged to pass these things, so off they go. So you purchase the property, and then you've got a little bit of pre-design and permitting, so it's much shorter process. Then, as you lay the foundation, you're also in parallel having the modules built. You're saying, okay, here's what we need. So off it gets done. You got 1 to 2 months of foundation work, 1 to 2 months of getting the modulars together, and those two things are happening in parallel. And then the on-site installation goes very quickly. By the time that the units arrive, the pieces arrive via truck. You crane them onto the foundation you've built, and sort of bolt things together, and off you go. So you can see you radically compress the time by we believe at least 50% in any case. And time is money in the construction business, so it's a huge advantage and a huge, I would say, measure of predictability that you bring to the process. So this was very compelling for us. And then in the end, you still get you still get beautiful homes and very contemporary looking, and we can, they're all designed with all the right design sensibilities, big windows, all of this thing, and it's a brand new home. So really gorgeous stuff. And with that, I'm going to show you guys, and let's hope this works. I'm going to show you guys just a short minute and a half video of the construction in action. So here we go. All right, cool. Now,
Maybe I'll make a couple of comments here.
yeah, please.
You talked about some of it, but you really, we've toured people through these. You don't know that they're modular homes, and unless you unless you're really looking for it. So they're beautiful floor plans. They're very open. You have high ceilings in these. You have, as Aram said, lots of windows. There's lots of light. It just seems like there's light coming from many places. And considering these are, comprised of modules, there's just a lot of openness and open space. And in one of these, videos that we've sent out, I'm half joking saying I want to live here, but it's it's really the truth, right? Living in the Bay Area in expensive, old, not so nice houses in many cases, it's like these are beautiful. Like you just feel good, being in them. So it's just really amazing if you use, kind of the right, the right, companies and the right materials and the right designs, how beautiful and how livable these are and how desirable they are. And I can say
Yeah,
that firsthand. I mean, it's just really
yeah,
amazing.
that's well said, Jeff. I think we've had a couple of investors in our projects come in and look at it and they're like, wow, this is. Now, I will say another comment is like I will say that one of the things I was concerned about, or not concerned about, but had to get over was modular construction for me meant the stuff from the 80s, which was horrible and ugly, and it was really almost like fiberglass blocks that they set out in front of a school for extra capacity, right? They were very utilitarian, and it's really come a long way. So I'd encourage you guys to poke around in this space. It's interesting. There's a lot of, I mean, again, we're looking at mega trends and how we can profit from those. And I think this is just one that, whoa, it just ticked a lot of boxes for us. But that's great perspective, Jeff. Thanks. So let's dig into. I don't know if we'll save questions for the end, but if you guys do have questions, start putting them in there. We'd love to talk about the stuff. We want to be here to educate you guys as much as we can on what we know. We're happy to share it. So our Austin market experience. Let's talk a little bit about this. So first, again, backdrop to why Austin. What was the context for this? So first of all, it's a fast growing metro, right? So homes are just places people live that have work in those areas. So what economies are growing? So Austin's growing and projected to grow, outgrow, or outpace the growth of some of these other major metros. Many of you already know that, feel that, so I won't belabor that point. Uh, it's also fueled by job growth. And I think one of the interesting things is jobs are where it's at, right? People talk sometimes about cities where they say, oh, a lot of people are moving there. But I always ask myself, are people moving there as like retirees or getting away from where they are, or is there real underlying job growth? And Austin has a lot of job growth, and it's not just Elon Musk. It's lots of places that are moving there to, these major Texas metros, even ahead of Dallas, Nashville, others. So, um, okay, so oh, by the way, and just one of the best places to live. I don't know if you guys have ever spent some time in Austin, but it's a pretty fun place too. So one is our jobs moving there. Another is just, is it a great place to live? And Austin is way up on the list of, one of the best cities in terms of just living, right? Lifestyle. And this one rings true when we think about these kinds of projects, which is, well, how is the housing and job balance, right? So if, again, it's just supply and demand, that's what's going to trigger or inform pricing. So you look at this and you can see, job growth on the rise. And what have we done about the housing situation? Well, it hasn't kept up is the bottom line. So when you see that displacement between the two, that brings opportunity. Okay, so what was, our approach? There's different ways to think about real estate. Some of you may be investing in things that are buy and hold, all that kind of stuff. We're into investing to make money, right? And buy and hold is one strategy, but in this case, build, buy, sell is the strategy for this, and it's a way that we can make relatively quick profits and develop cash flow for our fund, for our investors. So the approach is buy an older home in high value established neighborhoods in the Austin market. So we're not way out in the suburbs or in the, far flung cities of the metro area. We're really in the core of the city, so to speak. We're in the core of Austin proper, the city limits. So we're buying older homes, tearing those down, building new modular construction, and selling those new homes. There's a track record here. So our partner, our development partner, we always partner with somebody that has a ton of experience, has 3 years doing this in the Austin market. So they started doing this about 3 years ago. We'll talk a little bit about some recent legislation. But we saw them not only successfully build these, but sell these at price points that made sense. So they got a 20 million of track record doing this kind of work. And when we say 40 workers, what that means is he's got a company himself that's got 12 or so people working there. But then beyond that, there's about 40 trained general contractors and their crews that now know in the area how to install it. So we're not limited by like it's one guy, Charlie, and his crew that put these in. We can go to lots of different people that have all been trained to do this and do it well. So the pipeline, let's say, for doing this work is well established, and so that's what gives us confidence to keep going. This shows you in dollar figures and in time why this is an interesting play. So on the cost side, you can see traditional construction hovering around $300 a square foot. And again, this is in the Austin. Every area is going to be a little different, but I think the directional trend will be similar. So traditional construction around 300. Initial cost. So this is like the first year or so when things were working out the kinks of the process. It was a little more expensive to do this, but still well below traditional construction. Now, having honed some of the factory relationships and some of the install relationships and all the rest, we're really down about a $200 per square foot cost. Huge cost advantage. And then you tie that with months to completion, traditional construction, really hovering around 18 months, end to end. Initially was taking about 8, get it down to 4. So pretty impressive. So when we say a 6-month timeline, it's kind of an all-in timeline from buy to finished home that's sold potentially. So that really substantially de-risks the projects, both from a cost and a time perspective, and the time that it takes translates into cost if you're dragging on or you wind up getting into delays and things. So these two trends are super positive curves for us that drew us to this method, right? So another is, well, you've got the factory that's building this. Well, how the heck does that work? So you do have to have the modular. So this is a very important part of it is, well, who's the factory building these modulars and how can they get them and all of that stuff. So we've got a strategic partnership that we've worked out with a manufacturer. They've been doing it 40 years. And of course, they've they've gotten new materials and new construction methods over that time for sure as the technology's progressed. Um, they are have been providing stuff out of a factory in uh, South Carolina for these initial years of building in Austin. There's a new facility just coming online in New Mexico. I think it is now online, that will be pulling material from that'll make the shipping a little faster, but same quality, same company, and just the ability to scale. So we have ample supply there is the point. There's a known supply chain that we've worked out. Our developers have been working with them for a few years now. We're very confident that that's not a limiting piece of potential in this. And they're constantly looking at new designs, new materials, new ways to save costs, new ways to do things, new ways to build bigger, better things. So that's a well-established partnership, but an important part that has to be thought through. Um, so how does this stack up against sales? So is it people sometimes say, well, gosh, modular, does that come at a discount? It doesn't. It is you're building beautiful single family homes. And so here's how it compares to kind of traditional stick built homes. And you have four examples here. The ones in green are the modulars that were built, and then the yellow are the comps. And then you've got dates and few notes here about them, and you can see the square footage. So what's kind of important to look at is, what's the dollars per square foot? So you're ranging from February 22 to February 24, looking at some example sales. And you can see like the dollars per square foot we're getting are, quite good, either ahead of or in the pocket of these other homes. And part of that is, it is new construction and people are drawn to that. But this was really the proof for us. So one is you can build it, you can do it, the economics work, but at the end, can you sell it? And how quickly can you sell it? What do they sell for? And so as we got a lot of these proofs, we got really more and more excited about the space. So then what happened, right? So then Austin, middle of last year, as we were talking about creating our next fund here, we got excited about the fact that there was talk of rezoning in Austin, and they've now since done that. So in February of this year, they've done that, which really puts all of this, just amps up the returns for investors. And why is that? They're Austin's struggling with the same thing many cities are struggling with, which is density. So they've passed something that allows you to put in Austin city limits up to 3 homes per single family lot. Huge. Now, this obviously is subject to, you got to have the space, you have the right lot configuration. But if you have it and you've got the setbacks and all the things can be considered, and you're building to code and all of that, then hey, no problem, go for it. And they're very much fast tracking these kinds of permits. So it's a huge, huge opportunity. And if you look at most modern home construction now, anyway, people are doing much more vertical, much more dense stuff with smaller backyards and other things. And they're still selling like hotcakes in many cities. So we see that everywhere, and this is no exception. So the market's big. That's why we like it as well. It's a big opportunity for home developers. We feel like we're early to this, so we're blessed to be kind of in that early position. And the speed and cost advantages really play to this trend. So this is a huge one. Showing you kind of what that looks like. So we're building under this zoning now, right? We're buying things and doing this. This was the first of those projects. It's 3 lots were purchased, and you can see it winds up being 10 separate homes. And there's in this side, there's 2 townhomes kind of side by side. On the other side of the lot, there's a larger single family unit. So you kind of work with the configuration you have to sort of maximize the land, but still make it kind of livable. Ideally, if we can get 2 and 3 lots together, we can build a little enclave of homes. It's kind of cool, but we'll make it work, depending on the land and things we can find. So we're
Yeah, and
snapping
it's
the.
9 homes. I think you misspoke. You said 10, but
Oh,
so
sorry.
it's
Yeah.
the 3 per lot zoning. So in this case, you can see 9.
Yeah. Sorry, I did misspeak there. And then as you can see, this is where we were doing the install and things. So we're building on it, and it's great. Um, this is to show you guys a little bit of the economics of why. And so when we talk about how you can profit from this, well, we've got a couple examples. So in this Walnut Hill example, here's what you're seeing. Let's look at this. Um, this on the right, sorry, on the left. On the left hand side, the basic metric. So there were 2 lots involved, 3 homes per lot, 6 total houses are being built. The home sizes are about 1,600 square feet, and that translates into a square footage of just under 10,000 square feet. All right, so then the sources and uses. So the land cost. So when we bought those two lots cost us 670K. The closing cost there is 20 grand, and the construction cost all in is just under 2 million. So all of this is about $2.7 million. The financing, and look, this is expensive financing. Wow, 11.5%. It's not cheap, but it's a construction loan. These numbers will come down as interest rates drop a little bit, but we can afford to pay these high financing construction loans because we're not holding these for very long. Even if this were to double, it wouldn't really affect the numbers too much. So with an 85% leverage, we can get a loan of about 2.37. You got some loan fees, you've got the carried interest. So we're putting 240 days. I told you guys 6 months. We're penciling in more like 9 months worth of interest just to make sure we're being conservative on our assumptions and our pro forma. And then you've got some property tax, insurance, and utilities. These are just carrying costs you'll have during the time. So your total build cost is just under 3 million. So the equity you need, of course, is going to be these carrying costs, some of these loan fees, and the down payment, let's call it. So you need 690K, $690,000. So our fund is kind of saying, okay, well, we come up with $690,000. Well, what do we get for that? Well, sometime later, let's call it 9 months, worst case, we're looking at 660, well, 9 months as per this underwriting, but we think it can be done in 6 months. 660 per home. And so we're building homes in a really kind of band of 500 to 800 grand is kind of a sweet spot, right? Where they're highly attainable homes in the Austin market. So that throws off, just about $4 million. You've got some cost of sale, right? Real estate agents, all the rest of it. And so what are the net sale proceeds? It's 1.352 that are coming back to the fund. And that's an equity multiple of just under 2. So you put in nearly 700, you're going to get nearly 1.4 back. So pretty good math in under a year. And that's kind of the math that we look for. It's kind of the ratio we look for is what are we seeing in this equity multiple. I'll run you through this one a little bit more quickly. This is that 9 homes that we saw. So 3 lots, 3 houses per lot. Again, about 1,600 square feet. It winds up just over 14,000 square feet total built. This is the total land cost. This was a little cheaper. Great. So they're all in construction, about 3.7. Here's all the math on that. So what do you need to bring to the table? About, under a million at 925. And then you can sell those, we think about 665 in that neighborhood and against those comps. That gets you just under 6 million cost of sale proceeds. Again, sale proceeds against the investment you put in. That's about a 2.1 equity multiple. So really pretty good math and good line of sight visibility on these projects. And just, again, so qualitatively lines up with everything we said, but also the math really shows you there's a lot of margin here to play with, which gets us pretty excited. All right, so well, that's it. I got to the end. So this is us. We're LaCreme Partners. We do these kind of investments. I'm not sharing with you our specific fund information, but needless to say, we've got something cooking. If this interests you at all, if you want to talk more about modular construction and how, and if you're a contractor or you've got some land out in somewhere that you want our opinion on and want to work with us even to develop it, hey, we're here to help. We love investing, we love learning, we love talking to fellow investors. So that's our contact info. And again, we can share the deck and things with you guys so you can reach out and talk to us anytime. And I think the other thing too is that, a plug for Camoplan, we have a number of IRA investors that are investing with us because of the way the fund is structured and things, those investments, it's a very high preferred return. And that high preferred return they don't want to be paying taxes on, so they're shielding that and putting that in their IRAs and other things. So Camel Plan's got that vehicle. So if you don't already have a self-directed IRA that you can use, I think give Will a buzz and set up through him, and that way not only can you do really well in this or any of these kinds of investments, but you also can shield those from tax, because famous guy said it's not what you make, it's what you keep, right? So super important stuff. And with that, I will turn it back over to Will maybe for questions.
Yeah, thank you so much, Aram, for the great presentation, and Jeff for the presentation. A lot of great information there, as expected. And I appreciate the plug at the end as well. Very nice. Do we have any questions for Aram and Jeff while we have them? Now is the time. Um, in the meantime, while people are getting their typing fingers ready. Oh, actually, I think there's a question already. Phil Bass, are you guys planning a private placement? Are you currently running one?
Um, well, I'm trying to make this more educational than a plug for us, but the short answer is yes. Yeah, so there's an active private placement that we have for this particular Austin endeavor that is active and moving forward, and we've raised money and we are working projects through it as we speak, and we want more investors to join us because we think it's a very compelling investment. And I won't talk about the details. I don't want to take away from the educational part of it, but if that's interesting to you at all, happy to share.
I appreciate that, Aram. I appreciate the question, Philip. Another question that just came in. Are you only in the Austin market? Is modular housing more difficult in other states?
It's a great question. So let's talk about. So let me answer the question directly first. So yes, we're only in Austin today. We're looking at potentially how do we expand that. But I think housing and zoning and all of that stuff is a very local situation, a very local reality. I will give you the example. I'm in California right now. The way it works in California, um, high tax state, high legislative state, right? So lots of red tape. Getting things done here takes a lot longer. And we passed something called SB9 in California. It was at the state level, it was passed. And its intention was, hey, you can lot split. You can do exactly that. They wanted to solve the housing problem. They said you can do these lot splits, and they passed the law at the state level. The problem is that law flies in the face of the zoning of various municipalities. So we have a situation where Los Angeles County or city, I believe, is suing the state, saying you can't make us do this because our zoning isn't compatible. So it's a mess. So there's all kinds of ways that this thing trips over itself. The reason that we like Austin is, one, we were doing the modular construction in Austin. We had a developer that had wired in all of the careabouts, right? He had the factory relationship. He knew the area. So you have to have a lot of things come together. I wouldn't just show up in a market with no experience and necessarily say, we'd have to figure it out first. And so I would say
The
we
partners
figured
are
it.
extremely key, right, in all
Yeah,
of
yeah.
this.
We figured it out in Austin. It could be figured out somewhere else. I'm sure it's happening in other places, but one of the reasons we like what's happening in Austin is, as I said with the legislation in this case happened at the city level for the city. So Texas didn't say you can do this. Austin said you can do this in our city. Well, what does that mean? When you go to Austin City for the permit to build in their city, everything's lined up. Now, the modular itself, and this is more of a Texas thing, but the modular construction, those designs have been stamped and approved at the state level. And the way Texas works is, if you have that engineering stamp at the state level, it's good for all cities. So you show that stamp, you're like, I've got a stamp design in terms of engineering. All you need the city to do is then say quick permitting, you're done. So it fast tracks things. So our job fundamentally as investors is to de-risk investments as much as possible, right? So part of that is what are the things that would get in our way? Well, a development problem, a zoning issue, a weather impact, interest rates change, this and that. We have to consider all of these variables. So when we can de-risk that by saying, well, look, this is already stamped at the state level. The city wants this and is therefore fast tracking it. We have a guy that knows this market inside and out. We have ready general contractors that have been installing this for 3 years and know how to do it. So yeah, we could go to another town, but we've got a lot going on in Austin. And let's make hay while the sun shines. Because the other thing I will say, in in all of my and Jeff's personal experience, we've we've always made you can make money through a curve of opportunity, right? Those opportunities don't last forever. I think I described our build to rent opportunities. We love those projects. They're going to do very well for our investors who invested 3+ years ago. So they're going to make out really well. But had I
Yeah.
today, we continue to look for, does this make sense today? We can't find the same land at the same price point. We can't find the same financing. Labor rates, other things are up. Some construction costs are up. So there's things that don't make sense anymore. We could probably eke out a deal, but our job isn't to probably eke out our deal. Our job is to
That's
hit
right.
home runs for ourselves and our investors, right? So it's a very
So
long
we want to have
answer
a
to your
high margin of
question.
safety,
That's
right?
right.
So we don't want to just make it barely work and then hope.
Yeah, yeah, that's right. So I'm sorry about the long answer, but hopefully that helps give some context.
No, no, we love the long answers. We like as much of a faceted answer as we can get into, and we love the questions that pull that information out. So thank you, Jane. Jane has a follow-up question, and thank you, Aaron, for the answer, and Jeff. A follow-up question to that: Are there any issues with sewage or water needed to be improved? Any issues with going from single family to triple?
No, not no, there aren't. And we're not. So one of the benefits of doing what you call infill lots is these are lots that are in already established neighborhoods. So the infrastructure is in place. So we're essentially tapping city sewer, we're tapping the electric that's already running by the lot. Like everything is there. Um,
And
and
we're not
there's
running
no,
into deficiencies, right? I mean,
yeah, we're
Austin's
not.
also thought through this, right? This is something that they want.
Yeah. Now, if we were building, if we were taking a small lot and building 100 units on it, sure, there's going to be capacity issues. But you're building it's three homes up to three homes a lot. It doesn't impact things, in the slightest. And we can tap right in. There's no extensions of lines. We're not in a rural. We've run into this before ourselves. We know what it's like to have to spend $300,000 to go the last 100 yards that nobody thought of in the county, right? So, yeah, this is a good question, but it's not an impact point for us.
And by the way, Drive Austin, you see this happening everywhere, right? I mean,
Yeah.
the older housing stock is slowly going away and being replaced. Previously with the previous zoning in place, now there's opportunity to do three per lot, so this is happening all over Austin. You're starting to see this.
Yeah, I would say in a way you're kind of seeing this everywhere. Like if you think about it, go look at any newer construction. There's a great thing where I saw like it was a neighborhood and the houses were X wide, and then the new development behind it that was like 20 years later, the houses were half as wide, right? And then everyone's building density. I think that the reality is the Gen Zs and the others that are going to come online as buyers, they actually like, look, I'm old, so maybe I don't get it, but like, this is the new style of construction. It's designers are using and architects are really effectively using space and really effectively using windows and really effectively using things to create beautiful living situations with big open floor plans and all the rest of it. And a lot of people don't need, like, we had a comment on, oh, why are the lots so small? Look, it's not the days of big lots anymore. People have nice, tidy lots. You have, people that are working hard and they don't want to come home and have to do a bunch of landscaping. So having enough privacy and enough space seems to work. We actually see that, interestingly enough, in our build to rent rentals, because what we see there is people like having a backyard, and they would prefer, instead of having a third floor of a beautiful Class A apartment, they want to have this more single family housing experience. But really, what they care about is having their own four walls, so to speak, and having just a little bit of elbow room, and parking that they can drive right up, and
Parking
all
is
all
extremely
all,
important.
all of
Yeah.
these units have parking. They're not a flag lot with some weird thing in the back. It's not ADUs are nice sometimes, these auxiliary dwelling units, but sometimes people put them and then it's like they got people parking on the curb out front. That's not really its own unit. This is truly people having their own home, and so it really works. It's amazing.
Thanks, guys, for the answers again, and thank you, Jane, for another question. We do have another question that came in. I appreciate you both keeping this educational and but it does seem like there are questions coming in about the offering. Right, Larry asks, all past offerings were property specific, but it looks like your only offering is to invest in the fund. Do you still offer specific property equity investments?
Um, we 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 do. So not in this fund. We do in other offerings we might have. Typically, this is the first fund structure we've done, and we did it purposely because um, well, anyway, in the past it was this is the project, everybody's in, we raise 5, 6 million, whatever we do, and then off we go, we build it, we sell it, it's done. In this case, we had to do a fund structure because to buy 2 or 3 lots, it just was too small, right? Basically our contractor was kind of doing some of this with his own money. Our partner was doing this with his own money. We said, look, if you're putting your own 500,000, million here and there, why don't we just do this quicker so that can we participate together? And he said, that's great. I can use your help. Let's go raise some money. Let's go do this. Let's amplify the success as quickly as we can. And so when you think about that, the fund raises money. The fund invests in each one of these deals, each one of these projects. Let's say we anticipate the fund will do, I don't know, 20, 30 projects over the life of the fund in the next few years. We've already, just so you know, we've already funded and are off to the races on a couple of projects already. We've got things in the pipeline. So this continues to move. I don't want to describe the fund mechanics too much. It's a very flexible fund in that regard, as far as how you can get in and get out. Um, but the but we had to do that in that way because setting up a separate deal for a 2 house deal or a 3 lot deal, just the economics of it doesn't make sense. It's far too complicated. But the nice part is this is not a blind fund in the traditional sense where we're going to build homes all across America. We'll let you know how it turns out. The buy box is very tight. Is Austin? It's this. This is what we're doing. And Jeff and I, we're investor first, right? That's kind of how we think. So we have monthly reports. Our monthly reports say these are the things in the plan. This is what's coming up. This is how we're doing. So everybody gets to follow along. It's really clear. So I
And
like
we're
that.
the ones that are deciding if something meets the buy box. So,
Yeah, that's right. That's right. Jeff and I are the managers of the fund.
so we do turn
Yeah,
down projects,
yeah,
right? We turn down projects that might get done someplace else outside of the fund. But for the fund, we have a very specific buy box
yeah,
that we believe de-risks things as well, because we're targeting more of the median price, even though we're using these techniques even into the luxury space. So
yeah.
we're using this, construction method across a, kind of a variety, um, of places in the market, but the fund is very specific, right? Targeting more of median pricing in neighborhoods.
We also to some extent like that because things can, if you're a little wrong on one of the projects and a little right on the other, they kind of balance out because as many of you know, the pro forma is never exactly the way things turn out. It's a little more, a little less, right?
That's
So
right.
so this gives you a balance of that. And there's quick churn on these projects. So the cash is kind of always is recycling to some extent. Anyway, we'd be happy to talk to you more about it. I think please reach out to us. And I don't know, Will, if you can connect us to people, but we certainly appreciate that. And again, if you our fund is set up in a way where it's going to spit off a lot of cash, high pref. So shielding that in a retirement account is actually pretty useful. So if you have a retirement account with Camera or want to set one up, I would encourage you to do that because, again, it's what you keep. Any
Thank you so much, Aram and Jeff. I think that's going to be our last question for the day. It looks like we're closing in on the end of our allotted time as well. So I want to
Okay.
thank you very much, you both very much for the great information, all the great answers. I want to thank everybody who attended, everybody who asked these great questions. If you have any follow-up questions or want to talk specifics with Aram or Jeff, please use the contact information they provided. We'll also be sending everybody who registered a link to the recording of this webinar. And if anybody has any questions about how this applies to your self-directed IRA or just self-direction in general, please never hesitate to give us a call. We're always happy to help.
Yeah. Perfect. Well, thank you for having us. And I wish you guys all a great rest of the day. And again, this is in case you haven't told, this is stuff we love to talk about. So grab a coffee, give us a call anytime.
Our pleasure. You both have a great rest of your day too.
Thanks.
Thanks, you
Thanks,
guys.
everyone. Bye bye.
Bye.